Joining us now, first on CNBC is DoorDash CEO Tony Xu. Good morning to you, Tony. What a world!
Good morning, Andrew.
Now you're a public company, and all of a sudden it's all about expectations. And on a normal quarter, you'd look at your results and you'd go, "Let's throw a party." And now you look and you see that the stock is down 10%. So what are you thinking about this morning?
Well, it's always about the fundamentals, as I like to say, Andrew. I mean, even on listing day when we went public just a couple months ago, what I told the company is, while things might change as we become a public business, the one thing that doesn't change is that we have to continue building the best product for our customers. We have to continue focusing on mastering the basics of getting the best selection of restaurants, the quality of the delivery experience, the affordability of the service, as well as great customer service. And if we focus on those fundamentals and continue mastering them, the rest will take care of itself.
So let's talk, though, about this previous quarter, but then also let's talk about what you think the future of the world looks like, especially as we get into, hopefully, a summer where things get a little bit better in terms of the state of the pandemic and what that means for people dining out versus calling you.
Well, I really hope that, very soon that we will actually come out of this pandemic. And in fact, I wish that we could be doing this in person next time.
But what does that world look like to you in terms of your growth rate in a I don't know if we're going to call it a post-pandemic world, because hopefully it would be nice if next quarter it was, but let's say 6 months out from now.
Yeah, look, I think no one has a crystal ball to this. We certainly don't, but we are prepared for all of the scenarios, as you saw reflected in our guidance for the year. I think, with the data that we did see, if you take a look at 2020, for example, and you looked at the summer months of May and June, certain states in the U.S. did reopen fairly aggressively, Texas, Georgia, Florida, and you saw correspondingly the emergence and the rise and recovery of indoor dining, which I was super excited about. At that time, our business continued to grow. And so, again, there's no crystal ball. That's really one of the only data points that we do have here in the U.S. And I believe that as long as we continue to focus on building products that have the best value for all customers, consumers, merchants, and dashers, that's what we need to do for the long term.
Well, let me ask you, and maybe this is simply an accounting issue, but in terms of the way investors are going to look at your stock and the way revenue is accounted for, there seems to have been at least an issue with fourth quarter cash, not just the burn, but cash being held up by Stripe, which processes transactions for you. How should investors think about that?
A lot of the results in the fourth quarter with respect to cash flow changes really had to do more with one-time changes, especially in when it comes to, say, our cash position. Some of that, were reflected in what you talked about with prepaid held balances. Some of it were prepayments for expenses in this calendar year, 2021, that we made in the fourth quarter of 20. Some of it had to do with stock-based compensation, which kind of accrue all at once you go public. And so that's really what happened with our cash position. I think when you looked at the fundamentals of the business and the drivers of profitability, actually the company had a record quarter. It was our highest quarter of adjusted EBITDA, positive EBITDA, 3 quarters in a row, and we ended the year 2020 with positive cash flow.
Shepard Smith here. Thanks for watching CNBC on YouTube.